Welcome to Avalara. We're here to help you tackle the complex and ever-changing world of sales tax compliance, so you can focus on what you do best, running your business. Whether you're a growing family business or a large international manufacturer, we'll be with you every step of the way to help you manage your changing tax compliance needs as your business grows. We're excited to step into your corner and help your business thrive.
Hello, everyone, and welcome to another one of Avalara's Sales Tax Compliance webinars. We are so glad to have you joining us today. My name is Courtney Drake. I'll be your moderator for today's session on Sales Tax 101, Your Beginner's Guide to Compliance. The goal of today's webinar is to help you gain a basic understanding of sales tax and what your business needs to know to remain compliant, especially in today's fast-paced, ever-changing world. That's a lot to keep up with, so we're going to help you with that. Today, we have a sales tax expert, Matt Hammond, who is joining us. Matt has been with Avalara since 2014, and he focuses on helping businesses just like yours understand and simplify their sales tax requirements through automation. He talks to businesses every day and knows from those conversations some of the top challenges in understanding sales tax, and that's exactly what he's going to be talking about today. So with that, Matt, I am going to pass it over to you. Thank you for joining us today.
Awesome. Thanks, Courtney. Really appreciate it. And thanks to everybody for hopping on today. There will be a lot of things we're going to cover. And, you know, one of the things I want to take away is some interesting facts about sales tax and how important it is to states, as well as a lot of the basics that are going to be things you need to know for your business. And again, when we think Sales Tax 101, when I hear that, I want to know the basics. Like, what are the main things I need to know as a business owner, as an accountant, as a partner, what have you. So again, Courtney mentioned I've been at Avalara a little over 6 years, so I get to talk about sales tax 6 days a week. It happens on Saturday all the time. I don't know how or why, but sales tax comes up more often than not. So the agenda for today, we're going to walk through why sales tax matters and what makes it so important. We'll dive into the sales tax basics. You'll get a little bit of 101, 201, and 301. So we'll talk about, you know, some interesting things like sales tax nexus, what it means, what the definition of it is, and how it's going to impact your business. And then we'll also dive into the steps to managing sales compliance. And we have a wide variety of folks that attend our webinars. If you're thinking about starting a business, you're going to get some very valuable information today. If you've been in business for 3 or 4 years and you're doing $1 million in revenue and you're growing rapidly, there are going to be some things that you can take away from this webinar today that I think will be very helpful. And then obviously we'll offer our tips to streamline sales tax automation, as well as calculations, filings, and handling returns as well. All right, so to begin, I'm going to take a deep breath because sales tax is extremely complicated. There are a lot of different components to it. And why it's so important is really, and one of the things I think about a lot is it's a very high source of revenue for states. And we'll talk through individual states with their percentages and how much revenue they have from that. But it makes up a high amount of revenue for the states and at their individual level. And sellers collect sales tax directly from consumers, and then they send it back to the state. So if you think about it, it's a pass-through expense, right? I'm doing business in this state, I collect tax, and then I turn around and give it back to that state. It's one of those things that it truly has to be done properly. And you can see here, general sales, 34% of tax revenue. So very, very important. It has to be done accurately, efficiently, and truly on time. So we'll dive through what that means for your business here shortly. But a very, very important couple stats here just for how much sales tax revenue makes up for the states. Now, when we look at across the country, one of the things you'll see here is there's the percentages for what they rely on from a revenue standpoint for sales tax. Now, there's a handful that don't have sales tax, and you'll see those with 0. So we call those the nomad states, which are New Hampshire, Oregon, Montana, Alaska, and Delaware. They don't have sales tax. So there's only 45 states plus Washington, D.C. that do permit collecting sales tax. And you'll see here some of the states like Louisiana, Nevada, and Washington, 40% of their revenues come from sales tax. So very important. And when you see the lighter states, some of those will have some of the lower taxing percentages. Like Massachusetts has a flat rate of 6.25%. So everything is different. Every state is different, and all the percentages and the amount of what it relates to their sales and increasing from state to state, it's vastly changes from state to state, which is really important. Now, a lot of stuff happened in over the course of last year. The last 2 years have been really tough, and we've seen a lot of states and a lot of companies have to search for revenues or go to market in a different direction. Right? Closing down brick and mortar stores, having employees work from home. All of these things are changing how companies go to market, how they sell their products, how they hire employees. If you hire remote employees in a state, you now have to collect tax there. So that's one of those things that is very important. And we'll dive into those key nexus building activities here in a couple minutes. So when we talk, this is some of my favorite parts. I usually get that little 8-minute kind of warm up, and now we get into some of the things that are really key. So when we think the basics of sales tax, what is most important? And it really starts with what you're selling to begin with, right? Are you selling tangible personal property? If you're selling something you can touch, for the most part, in most states, it's going to be taxable. So you're going to have to charge sales tax and calculate sales tax when you make a sale. When you get into services, it's exempt in roughly half the states, depending on what the service is. Software as a service, I think, is taxable in like 26 states, and it was 23 2 years ago. So it changes from year to year. And then you can see here some of the states highlighted that narrowly taxed services or also broadly taxed services as well. States are looking for new sources of revenue. And again, how are you currently managing sales tax? Do you have somebody doing it for you? Are you trying to figure it out yourself? Are you relying on the native tax functionality inside of your accounting system, which is okay. As long as you're collecting tax where you should, that's the starting point. Doing it in-house. One of the number one, I hear this a lot is, who are you trying to get to automate this that has never done it before? And it's typically going to be companies that are managing sales tax internally. And now we're seeing sales tax be too complicated and too cumbersome with companies having to get registered in more and more states, where it's becoming a little overwhelming for some CPAs and tax bookkeepers and whatnot, because they're very versed in the states they're located in. But if it's 10 states away and they don't know the rules and laws there, it's one of those things where it may not be something they want to continue to do. And CPAs and bookkeepers are our number one source of referrals. They're great partnerships, and we don't want to take business away from them. But sales tax is our main focus, and we can definitely help with it. It's all about the who, what, when, where, why, and how. So you have to start at the very beginning of sales tax, which we'll dive into here in a minute, which is sales tax nexus, but looking at how high the sales taxes are in your particular states. You look at Tennessee, Alabama, Louisiana, Arizona, and Washington. They have the highest tax rates when it comes to sales tax across the country. And then anywhere, I always tell folks, if you take a median average across the country, it's roughly 6.5% to 8%. And that can be a lot of money when you talk about a high dollar invoice, right? You have $100,000 deals and you charge sales tax. That's a good percentage of money that you're going to have to collect, file, and then remit after you've calculated it properly. So a couple cool stats here on the states. Now, why does it matter? That's one of the big things I get a lot, is why is sales tax so important? So there are different rules, different rates, different boundaries in every single state. And it takes something like a pandemic to change how people sell their products or go to market or have employees in specific states and offices. And just something like that can change how you approach it. And all it does is make it that much more complicated and that much more challenging. Now, this is where it gets really interesting. And what I want you to think about is your company specifically, your employees, your business as a whole, And I want you to take these next couple slides I'm going to talk about, and I just want you to ask yourself these questions about your business, because sales tax nexus is an industry term that means you've established some sort of physical presence or a connection to a state. So I have employees in a state, inventory, and again, think outside of the home state you're located in. So here's what I like to say. There's a couple different types of nexus. The most common traditional physical presence nexus, the first, means you have inventory, offices, humans working in a state, boots on the ground, traditional physical presence nexus. Economic nexus is the second one that has become most relevant in the last 3 years because they changed the rules at the Supreme Court level. Now, economic nexus means if you sell enough into a state, but you never go there, you potentially have to get registered. Most states' thresholds are if you do $100,000 in sales or you do 200 individual transactions, you have to get registered there. Those are the two most common types of sales tax nexus. And then we have click-through nexus, affiliate, as well as marketplace, and we'll dive through those here shortly. So back to my original point of look at your business right now. And then what you want to ask yourself is, do you have any of these things on the screen related to your business outside of the home state that you're located in? So do you go to trade shows in a different state? Do you have inventory? Do you have remote sales? Do you have board members? Do you have property? If you have any of these things outside of the state you're located in, odds are you probably need to be registered and collecting, filing, and remitting sales tax in those particular states. Now, I'm not a CPA or a tax attorney, so I can't give legal advice, but we're going to point out some of the primary reasons why companies have to get registered in new states, and a lot of them start right here. So if you have any of these outside the state you're located in, where your home office is, you need to evaluate and potentially get registered in those states. And we'll talk about it a little more soon. So I mentioned and I touched on economic nexus. Now, the ones that we showed on the previous slide were traditional sales tax nexus, physical presence majority. South Dakota went to the Supreme Court and they challenged a longstanding ruling. They said, look, the way people buy and sell products has drastically changed. So we want you to change the rules. And the Supreme Court actually ruled in favor of South Dakota and said, you're right. The way people go to market and sell products have changed. So we're going to allow at the individual jurisdiction, state level, you can have your own thresholds, and you can now require companies to get registered in your state if they sell a certain amount. And 45 of the 50 sales tax, 45 of the states that collect sales tax have adopted this. And most states, it's $100,000 or 200 individual transactions. There's a couple states, California, New York, that have $500,000 thresholds. But the majority of the states have deemed that if you do $100,000 worth of sales, when you get to that $100,000 and one, you now have an opportunity to collect, file, and remit sales tax. Most states expect you to get registered within 30 to 60 days. Heck, Ohio, they have it in their rules that you need to get registered the very next day. Now, Avalara can assist with the registrations, but one of the key things we talk about when we have companies that are newer companies or they've been in business a few years is evaluating which states you need to be collecting tax in. We have an amazing risk assessment on our website. If you go to avalara.com and type in sales tax risk assessment, you can answer some questions about what you're selling, your business, what your sales are, and it will compute and give you a report to give you an idea of how many states you should be collecting sales tax in. Hundreds and hundreds of companies going, oh my gosh, I should have taken the proactive approach when I first heard about this. I now need to get registered in 13 states. Now that means I have to get registered. I have to start calculating tax. I have to start filing sales tax returns. There's a lot of new things I have to do, which will transition to how we can help automate that here in a few minutes. And if there's any questions on the thresholds, please put those in. We have a bunch of stuff that we can provide, content on our website, our Wayfair page that Courtney and I can send in a follow-up as well. So if you're a $5 million company doing simple math divided by 46 states, you potentially are going to have to get registered in 3 or 4 additional states. Now, what's important is and we'll talk about how you can quantify this here in a couple minutes, but you want to look at the states that you have the highest amount of sales in. Because if you don't sell anything to Louisiana, you don't need to worry about their threshold. But if you sell big furry winter like parka coats and you sell them predominantly to the Pacific Northwest and the Northeast where it gets cold, those are the states you want to see what the thresholds are and if you potentially pass them and then have to get registered. If you're under $1 million and you're just getting started and you're 3 years in business, now's at least the best time to try and figure out if you are collecting in the states you should be. And then if you're doing 5, 6, 10, $20 million a year, an example I'll give is I talked to a company last week and they sell tangible personal property. They do $21 million a year and they're registered in 1 state. They need to be registered in like 25 more states. And it's a good thing we had that conversation because now they're aware of that they have a larger sales tax profile. And we can walk through and quantify that and address it as well.
Matt mentioned that we have a bunch of resources on Nexus and Economic Nexus. So I just wanted to call out, we do have those links available on this page. So that's what I was referring to earlier, where we have Economic Nexus laws by state. So if you want to click on any of those, again, bookmark them for future reference. It's great for business owners to be able to, or those who work in businesses that are managing sales tax, just to be able to have a quick reference for some of those things. So feel free to use those.
Perfect. The thing I'll say is now's the perfect time to be talking to us. Because if you're going to go from $1 million to $3 million over the course of the next 24 months, having a tax strategy and or compliance solution in place will make it that much easier for you to accommodate the growth that you're going to have from a sales standpoint. You want to do a segmentation on where's the majority of my sales and or are there states where I know I do over $100,000 in that I'm not registered? If you have a bunch of those, it would make sense to have a consultation and we can walk through the best path forward. Because the way I like to phrase it is Avalara can help you as much or as little as you need. We can help address any historical liabilities. Should you have been registered and collecting tax in a state for 4 or 5 years and you don't just want to go get registered, we can help facilitate that. Or if you just want a compliance partner moving forward and you just want to get registered, we can do the registrations and get you a sales tax automated solution. So now we're going to walk into the 5 steps that how to manage it and also how we can help. You're on Avalara's webinar today. We want to give you a bunch of information. We want to make sure you also are aware that we can help you in every step of the way. So we've talked briefly over the last 10 minutes or so, Courtney, about understanding where you have obligations for sales tax. So where do you have a sales tax nexus? And again, nexus means you've established some sort of physical presence or a connection or a tie to a state. So you hired a remote employee in Florida. Great. You need to get registered in Florida. You have inventory in Georgia. You need to make sure you're registered for sales and use tax in Georgia. Number 2, get registered. You can go on the Department of Revenue website and you can apply for a sales tax ID at no cost there. Sometimes you'll get stuck where it takes a couple weeks or a little longer if there's a government shutdown or something like that, where it may take they're at a loss of employees and they may be a little backed up. Avalara can facilitate those requests. We typically turn the tax IDs around in 3 to 4 business days. We have an automated solution inside of our platform that can get those done very quickly. We can calculate the sales tax. So then turning on sales tax calculations in your platform or on your website and start calculating the proper amount of sales tax that you're going to charge your customers in the states you collect or remit tax in and in the states where your product or service you sell is also taxable. Number 4, tracking. So managing exempt certificates and exempt customers. I can't tell you how many calls I have a week where it's like, hey, Matt, we don't have a sales tax problem. 90% of our customers are exempt. My next question is, well, how many customers do you have? We have 15,000 and we're registered in every state. Great. That means you have to have 15,000 PDFs on file to prove and provide documentation for why those customers are exempt from sales tax. So we have a product called CertCapture that's meant to store, maintain, validate, and manage the life cycle of exemption certificates. As companies get registered in new states, they then have exempt customers they were selling to before that they didn't need an exemption certificate for. Now they're registered in that state and they have to get those updated certificates. So that's one of the big pieces when it comes to a sales tax audit. Most people fail sales tax audits for missing documents or exempt certificates or can't provide documentation for it and or consumer use tax for your purchases internally. And then number 5, remit. So file the sales tax returns, remit the payments. That's one of the number one things people want to automate in the sales tax process is how do you automatically file my sales tax returns? I talk to controllers and stuff all the time, and they say they spend 3 or 4 days at the end of every month filing sales tax returns when they'd rather be playing golf or just not staring at a computer and filing sales tax returns. So one of the number one things people want to automate. All right, so again, number 1, understand where you need to collect remit tax, right? We have a free risk assessment on our website where you can fill that out, and it will provide a bunch of information on what creates nexus in certain states and if you have an obligation. I typically say a lot of it starts with a conversation. If you reach out to us and you talk to one of our sales teams or myself here, we're going to talk about your business for 30 minutes and help uncover and help you understand what states you need to be collecting and remitting sales tax in. So number 1 is have an evaluation. Number 2, get registered. So when you have to get registered in a state, you need a sales tax ID. And if you have a office or like inventory in a state, you will need a sales tax, you will need a business license as well as a sales tax ID. We facilitate those in every state for $399, sales tax registration as well as a business license in those particular states. And we can ask you questions about your business and where you have people to determine if you need the licenses or if you just need a sales tax ID. Most companies that are just getting registered in a state solely due to economic nexus, probably a bunch of those companies that answered they're doing over 5 million, are probably just going to need tax IDs, and we provide those for $349 per state. The second one, register and collect and remit sales tax. So when you get registered and you fill out the application, you're basically saying, hey, I just started my business. I need to get registered moving forward. When you fill out the application, you have to be truthful in the date that you list that you started conducting business. If it was 2 years ago or longer, you may not just want to get registered. You may want to engage in a voluntary disclosure agreement with the state, because if you get registered and then they write you a letter and say, we believe you've been doing business in the state for 4 years, they can come back for all the uncollected tax, penalties, fines, and interest. And it can be very problematic if you're a couple $1 million a year company or you've done a lot of sales in that particular state. So you don't just want to go get registered if you have any historical liabilities. And again, Avalara can help you address those liabilities and also get you a compliance path moving forward. Step 3, this is also one of the hardest ones because there's all these different states and they have all these different jurisdictions, and you have states like Colorado, Louisiana, and Alabama that have local taxes, local returns that have to be calculated, collected, filed, and remitted. There's over 11,000 taxing jurisdictions across the United States. Texas has, I think, 1,598 last time I checked. Now, that's only going to be relevant for the states that you have an obligation to collect and remit sales tax in. But remember, if Wayfair taught us anything, it's that as the seller, you no longer control where you collect sales tax in. And what I mean by that is if your customers buy enough of your product, they're effectively driving what states you have to get registered in. And if this is the first time you're hearing this, it's not a problem, right? You're not alone. I have conversations with businesses every day. I didn't even know about this Wayfair thing. I didn't even know about economic nexus, but I'm really glad I'm having the conversation now. The point to that is let's address it now as opposed to a year or two from now when it's too late. Interestingly enough, these are some really cool statistics, and I love talking about these on the webinar. So product taxability and the taxability of product services varies from state to state. If you get a bagel in New York and it's whole, it's exempt from sales tax. If they slice it, there's a service involved and it becomes taxable. The candy bars in Indiana, the varying taxability it depends on the amount of flour content in the candy bar to whether it's treated as a food item or a candy. That can change the taxability of what you're selling. Snow removal, the donuts, the tree trim in California, these are just some wild sales tax rules that just let you know not everything's taxable, and almost everything can have varying taxability across state lines. And then as we transition to calculating the right amount of sales tax up front, a lot of this has to do with the customer experience. So many companies are driven by repeat customers, word of mouth, referrals. If they don't have a good experience buying your product, you didn't charge the right tax, and you had to ask them for more because you were doing it manually, that's not a good process, and they're not going to want to buy from you again. So calculating the right sales tax at the front end is critical when it comes to customer satisfaction and potentially repeat customers and growing your book of business. Now, we talked briefly on the exemption certificates. Exemption certificates always take a deeper breath because they are very challenging. States like Florida, Washington, and Washington, D.C., these certificates expire every year. So you have to get new ones. In some states, it's based on a calendar year. Some states, it's based on when the certificate is issued. We help to store, maintain, validate, and manage the life cycle of those exemption certificates on behalf of your company. Now, if you're getting registered in 5 new states and you have exempt customers in those states, you're going to get a bunch of new certificates that you have to have on file. We can run email campaigns to send to your customers on your behalf. We can actually validate those certificates for you and make sure they're the right certificate for the right reason for the right state. I had a company I worked with last year. They had the wrong exemption certificate for 3 years. It cost them $600,000 in an audit. They were a huge company. It was the wrong certificate, and they couldn't go back and get a new one. Those are the things you run the risk of if you're not obtaining these documents from your customers. So if you've never collected a certificate from the people you sell to, I don't want to say it's okay. We'll address it now, but you want to let them know you're updating your books for Q4 or 2022, and you need to get that updated certificate on file. They'll provide it to you. They have to. Again, it's your job as the seller to be able to provide documentation to prove why that customer was exempt from sales tax. It's your job as a seller, not necessarily the consumer. And the exemption certificates, again, requesting them, number one, from your customers, having them on file, noting which ones are going to expire 30, 60, and 90 days out. These are all things that we can work with you, for you, and automate as part of the sales tax compliance. And then step 5, so filing and remitting sales tax returns. I've never met someone that likes filing sales tax returns for their company, ever. We have, I think, 150 people in our compliance division alone at Avalara, and that's all they do is file sales tax returns. I used to walk by them every day, and I was like, you seem really happy. You must love your job, because that seems very boring, and nobody likes to file sales tax returns. So we have an entire team here dedicated to manage the filing of the sales tax returns. If you get notices from the states, we will actually forward those to our compliance team. They'll work with the state on your behalf. But we can file the sales tax returns, remit the payments. We answer those tax notices, and we also get timely filing discounts. There's a handful of states. If you file your returns on time, they give you a discount for the next filing period, and we're able to honor those as well. And I mentioned the states like Colorado, Louisiana, and Alabama. Those states have local jurisdictions. So you will file a local return in Colorado. Let's say you have employees in Denver, Breckenridge, and Centennial. You would have to collect local tax at those 3 locations and then file a sales tax return to each of those locations in addition to the DR 100, which is the Colorado state return. All those things have to be done if you're in those funky states. And Louisiana has the parishes. I think they have like 96 parishes. I may not be right there. I was actually born in New Orleans, so I should know this. But there's a bunch of different parishes where you can have a parish tax that you have to collect and then remit to that parish, and then also a state tax that you collect and remit to the state of Louisiana. So there are some very challenging states out there, and I'll say them again: Colorado, Louisiana, Alabama, and 2 other ones that are not home rule, California and Texas, are very difficult. Illinois is also one of the more challenging states. So if you have to get registered or collect tax in those states, it would definitely be worth having a conversation to see how we can help. And again, the biggest thing is filing the returns on time and filling them out properly. That's what I've heard over the course of 6 years at Avalara that takes the most time, or where the most errors come up. So again, I'm a firm believer in do what you do best and outsource all the rest. Sales tax returns is not my bread and butter, so I would pay a company like Avalara to do it. My toilet broke like 3 weeks ago. I didn't even try and fix it. I just called the plumber because that's what they do every day. So I'm going to let them fix it. All right. So again, to cover the 5 steps, number 1, have an understanding and a knowledge of where you are collecting tax, as well as where you should be. to begin with. Number two, engage with a company like Avalara. We can do the licensing and get your registrations done. Calculate sales tax in the states you're required to. Our AvaTax tax engine can handle those calculations in real time. The certificate management, if you've never gotten certificates from your customers, now's a perfect time to talk about how you can send requests and then store them on an ongoing basis. And then 5, remit the sales tax to the proper states and local jurisdictions as you collect it and file it. One of the key questions I get all the time is, Courtney, when it comes to remitting and filing, is how often do I have to file sales tax returns? What form do I file? A lot of folks think that Avalara makes that determination, but it's actually done by the state themselves. So on your application, when you register for sales tax in a new state, they're going to ask you what your projected sales are and projected amount of sales tax that you will be collecting. When you input that information, they're going to provide you your form that you file, as well as the filing frequency, monthly, quarterly, annually, semi-annually. And then you will take that information in and input it into our software, and then we will automate the filing and the remittances on your behalf. So think about this. There's an average of over 300 hours lost in a calendar year of spending time on filing sales tax returns, Googling taxability, trying to get certificates. That's a lot of time. And if I'm a controller or a CFO and I speak to them all the time, they go, look, my time is valuable. What can I automate? If 2020 taught controllers and CFOs anything, it's what can I automate that I don't need a human to do? And sales tax is definitely one of them, because again, it's a non-revenue generating activity. Now, it doesn't mean, it means that you can have your personnel focus on things that are going to generate revenue, but stay away from 300 hours lost of sales tax compliance stuff. Why automate sales tax management? Number one, accuracy. You want to have repeat customers, and customer satisfaction is the third one, but you need to have sales tax calculated properly on the front end so they can complete their purchase. And then it's business as usual from shipping the product. They get it, they like it, they keep it, they come back. Efficiency, so reducing costs and time spent on managing tax compliance. It doesn't make sense to spend a lot of time on something that's not going to drive revenue for your company. Customer satisfaction, you want repeat customers. Risk management, so with accurate results, you'll decrease your company's risk. I talk to a lot of companies, Courtney, and they want to get, they either are potentially going to try and sell their company or go through an acquisition. You can't be non-compliant and go through an acquisition or merger or be bought out, because that company is going to assume whatever your liabilities were. So that's part of why making sure you have everything set up and you are compliant now is key moving forward. And I've had a couple companies this year where the first thing they said on our call was, we're planning to get bought out in the next 6 months. So we need our sales tax to be buttoned up. No problem, right? We get them compliant, we get it accurate, and then they can go through their acquisition and everybody wins. And then accommodate growth. One of the things I say about Avalara is you can never outgrow Avalara. We have over 1,000 different integrations. I'll talk through that here in a couple minutes as I walk through the suite. So here's some really cool numbers and some statistics of the benefits of automating tax software. Just being confident with your go-to-market strategy. The 48% peace of mind, that's one of the things I love. I was just on with a controller of a $10 million e-commerce company that sells clothing. They didn't know there was varying taxability across state lines, and they've been doing it incorrectly for years. And he's like, look, I just need to know I'm past this, so I don't have to worry about it, right? The ability to scale. Okay, we have integrations to 1,000 platforms, and our tax engine is meant for growth. So a couple things in our compliance suite. Number one, AvaTax is our tax determination engine. So we have an integration to your shopping cart, your accounting system, where we can calculate tax live when you go to invoice somebody or when they check out on your website. We have integrations to those platforms where we can calculate sales tax and determine if what you're selling is taxable. In that 0.2 of a second, when we do that calculation, we look at the rates, rules, boundaries, and then the taxability, and put that tax calculation back on the invoice itself in QuickBooks or NetSuite, or in the shopping cart for WooCommerce or Shopify in real time. The second thing we look at, well, first and foremost, we go, are you collecting sales tax in this state? Yes or no? Great. Is your customer taxable? Yes or no? If the customer is not taxable, we will not calculate tax. And then we go to the product level and look and see if the individual line items are taxable or not. You can mark customers exempt in QuickBooks all day and we won't calculate tax, but then that third piece comes up where you have to manage those certificates and have documentation for why those customers are exempt. And then on the back end, obviously we can file the sales tax returns, remit the payments to the states and any local jurisdictions on behalf. So this is our compliance suite, and this is what AvaTax makes up. Our services are a la carte. We're typically going to position a full suite to automate everything from end to end. But again, we can take a scaled approach. We have companies start with the calculations and then they have us file the returns 6 months later and or manage their exemption certificates as their exemption certificate customer base grows. And I see some questions coming in, so I'm going to go quick here, Courtney, so we get at least 15 minutes. All right. Now, here's this is one of the best questions I get. Matt, this sounds great. I need to automate it. I got to collect tax in 10 states, but this is going to cost me money. So there is a program called the Streamlined Sales Tax where you can leverage Avalara for no-cost services in over half of the tax collecting states. So I want you to think about it like this. If you're having to get registered in a bunch of states solely due to economic nexus, you cross that threshold, now you have to get registered. You can partner with Avalara, and in 24 of those states, we actually will get you registered at no cost. We'll calculate the sales tax at no cost and also file the sales tax returns at no cost via the Streamlined Sales Tax Program. We have been a CSP, a certified service provider, for the SST group for over 11 years now, I think, Courtney. I think we're at 11 years. And we have an agreement with them where we will calculate, collect, file, and handle the remittances through their program. And you can actually leverage Avalara for no-cost services in over half of the tax collecting states. So very beneficial. That program typically takes about 60 to 75 days to get accepted to, go live on. But the benefits definitely outweigh it, because if you have to file 350 returns and we can do 200 of them at no cost in half the states, it's going to make it that much more cost effective to have a automated compliance solution and partner for your business. And one of the things I want everybody to think about on this, when you get off the webinar today, is you have to think about Avalara and a sales tax vendor as an extension to your business. Simply put, we're here to help you automate, not spend time on sales tax, and focus on things that are going to push your company forward. I really appreciate everybody being on the webinar today. So we have a couple questions that have come in, and I'm going to go ahead and I guess, Courtney, I'll pause and take a sip of water. I do see some of these questions popping up, so let me jump over here and see here.
When you say a couple of questions, we have had over 200 questions, so there's a little more than a couple, but this was a great starting off point. So we could honestly spend the entire day just talking through the specifics, but we'll try to go through and maybe gather some of the most asked questions. Going back to economic nexus thresholds, a lot of people have been asking, are the thresholds that you were mentioning, are they annually, and what are the dates that those kind of expire and turn over again for that year?
Great question. And economic nexus is probably one of the more complicated things to initially grasp and understand. So if you did $100,000 or more worth of sales in South Carolina 2 years ago, you should have been registered 2 years ago to start collecting sales tax. Now, the sales are based on a calendar year. So if you did $90,000 worth of sales to South Carolina last year, you haven't hit the threshold yet. You don't have an obligation to collect and remit sales tax yet. That clock, that's when you get, let's just say hypothetically in that scenario, you did $90,000 in 2020. If you then hit $100,000 in 2021 in the calendar year, then you get registered to collect tax moving forward. Once you're registered in a state, you're registered. If you don't hit that threshold in any of those states, you don't have a sales tax obligation. And again, most states, it's $100,000 or 200 individual transactions. So what you'd want to do is you'd want to look at what your state-by-state sales were last year, potentially 2019 and potentially 2018, to get an idea of it. If you have a consultation with Avalara, we have a great file we can fill out, and we can put some information in there, as well as your economic nexus tool on the web page for Avalara. You can put that information in there, but it's based on a calendar year. And once you cross that threshold, you should be registered moving forward within 30 to 60 days. Great question. Courtney, I'll turn it over to you for the next.
Might help if I go off mute here. Someone asked, and I've seen a couple of questions on Shopify. If I'm selling through Shopify, do I still need to pay attention to all of this? Any thoughts on that one?
Yep. So Shopify is a shopping cart. We have shopping cart integrations for WooCommerce, Shift for Shop, which was formerly known as 3D Cart, Magento. There are hundreds and hundreds of different platforms that are shopping carts themselves. If you, inside of that cart, you would want to be able to turn on native tax functionality. So in Shopify, if you're on one of their basic versions, there's a basic, pro, and advanced, and you collect tax in 2 states, you need to go into your profile in Shopify and turn on tax collection in those states. I think the question, in addition to that question, marketplaces are a little different. If you're selling on Amazon, eBay, Etsy, or Walmart, they're actually taking care of the tax for you in about 40 of the states due to marketplace facilitators. But for a personal store, your own website, your own shopping cart, it's your responsibility to either turn on sales tax and or leverage a partner like Avalara that plugs into your shopping cart to calculate the sales. So kind of a long-winded answer there, and happy to take it offline.
Going back to marketplaces, we've also had a couple of questions that have come in on that where a business sells only through a marketplace. And so they were asking, in that case, do they have to do anything with sales tax? Because it really does fall on the marketplace facilitator, the Amazons, the Etsys, the Walmarts, what have you, to collect sales tax. So what are the responsibility of the businesses selling on those platforms then when it comes to sales tax?
Yep, that's a great question. And marketplaces get a little tricky. Now, the marketplace facilitator, MFA states, and I believe it's 40 of the 46 states that collect tax. If you're the only reason you would have to collect tax in that state is due to a marketplace, there are, I want to say, about 15 states that say you don't have to get registered. The marketplace is handling it on your behalf. There are some states that say if you are only selling on a marketplace, you still may have to get registered in your home state, and you will file a sales tax return. But on that return, if all the sales tax is done by the marketplace, you note that, and then that's effectively a $0 tax return. So it is state by state specific. A decent amount of states say that if you the only reason you would be registered here is due to a marketplace, but the marketplace is doing it, you may not have to get registered. And Courtney, I have a great link that walks through a state by state guide on what the case is for that. So I'll make a note here and we can provide that in a follow-up if whoever asks that question can shoot us an email.
Great, yeah. And then that actually flows in perfectly to my next question, which is when you say register in the states, we've talked a lot about the need to register to collect sales tax in a state. That's actually different from the need to register your business in a state, right? So
there's a couple things. When you're starting up a business, number one, you need to get a federal, an FEIN number. So that gives you a legal E number for your business at the nation level. Then you will have to get a sales tax ID so you can legally collect and remit sales tax in that state. In certain states where you have inventory, offices, or warehouses, you will typically have to get a business license in that state, a license to conduct business, and a sales tax ID. Now, we do all of that for $3.99 per state. If you don't need a business license, and typically that means you don't have an inventory, you don't have a warehouse, you don't have anybody in that state, you just need a tax ID, a sales tax ID that is, and we facilitate those for $3.49 per state. Great questions.
All right, let's see. So this person says, I live in New York, but if I sell something and then ship it to a different state, such as California, whose sales tax rate do I charge it to?
Great question. So the rule of thumb is sales tax is derived based on where the product or service is. Let's say product for this example. Sales tax is derived from where the product is changing ownership. So let's say, and I forgot the state, apologies, but I'm in North Carolina. I sell my product to South Carolina. If I don't have any inventory, any employees, or I have not crossed economic nexus, I have no requirement to collect sales tax or charge sales tax to that South Carolina sale. So sales tax is typically derived from the ship to address. So if you're shipping pens and earbud holders from North Carolina, South Carolina, and you have to get you're registered in South Carolina, you charge South Carolina sales tax, and then you remit it to the state of South Carolina. That example, I did different states, Courtney, but hopefully that will alleviate some of the concerns. Sales tax is derived from where the product or service is being shipped to. And if you have an obligation to collect tax in that state or you're registered, you'll charge sales tax based on the ship to address. Good question, though.
Yeah, that's perfect. And then along with that, zip codes are not the right way to charge sales tax from what I've heard. So can you talk a little bit about that and how to determine the right rate for exactly where you're shipping to?
Yep. Yeah. And this goes back to the platform. Most accounting systems, shopping carts, platforms will have some form of a tax functionality. It's typically based on just a zip code. Now, zip codes aren't accurate. They aren't the right tool for the job. And they're also not going to determine whether or not what your product is selling is taxable or not. So Avalara will override the native functionality. We do rooftop level calculations. We actually take your address that you ship to, we convert it to latitude, longitude, and we pinpoint it down on the map to give a 100% accurate tax determination. And states like Colorado, Louisiana, Alabama, you could have 9.25% on one side of the street and then 4% on the next. If you're using a zip code or a rate table, you're probably going to get that calculation wrong. So we stress rooftop level calculations as we make our tax determinations on your behalf.
Yep, great. Next question, going back to economic nexus. If you are below the economic nexus thresholds and then you pass it, do you need to go back to historical sales to collect the sales tax?
No, your obligation to collect will be on that $100,000 and one sale moving forward. The states may ask you about your prior historical sales, probably to determine filing frequencies, but you don't have an obligation to go back and collect any tax prior to that 100,000. However, if you had a nexus generating activity prior to that, you might be liable for whatever sales you did have prior to getting registered. So that's when we talk about voluntary disclosure agreements, where we go to the state and act as an intermediary on your behalf to limit the look back period, request penalty abatement. An example I get is I had that company I mentioned, they do $22 million a year and they're registered in Tennessee. They're going to leverage us to do voluntary disclosure agreements in like 25 states because they probably owe like $2 or $3 million in uncollected sales tax. The goal would be to go through those VDAs and only have to write a check for $1 million versus $2 million, because we limit the look back period to 3 to 4 years. And then we request penalty abatement on your behalf. And the states always grant that because they're going to get a lot of free tax money without having to do much.
Yep. Okay. We've had several questions come in as well on exemption certificates. So one person asked, do we need to register in the state as well as get the exemption certificate, or is it just collecting the exemption certificate to be compliant?
So a couple things. If you're not registered in a state, you technically wouldn't charge that customer tax. And if they're exempt, you wouldn't necessarily need that exemption certificate on file. The best practice is, even if you're not registered in that state, you should get their certificate, because you may have to get registered at some point future forward. As you get registered in a state, you will then need to request certificates and get those from the companies that are exempt from sales tax. And in addition to that, as your company gets registered in a state, your company can then request an exemption certificate for yourself to be exempt from anything you purchase from that state that you're then going to resell to an end user. So in a state to collect sales tax, as you get registered or your company's registered for sales tax, you can request a certificate for your own company so that people don't charge you tax if you're reselling something else. So that's more so on the internal side. But externally, you will get registered in the states. And then if those companies are exempt that you sell to in that state, you now have to get those certificates that align with the sales and the invoices you have where you didn't charge them tax. Great questions. Okay. The state, and one of the other ones real quick, Courtney, is state of Washington, they expire every year. State of Florida, resale certificates in Florida expire every year. And then there's a couple exemption certificates in Washington, D.C. that need to be renewed every year as well. So that's what I mean. It's kind of a blanket statement, but they're not just you get the PDF one time and then you're good. That was my biggest point.
Yep, got it. Okay, we've had other questions. I mean, we've had tons of questions, but I guess one last topic is services and taxability around services. Anything that you can provide? I know it varies by state, but any good resources or tips?
Yeah, we have some great white papers, and we have a lot of great information on our website where services are always going to have varying taxability across state lines. There's a lot of states that tax software as a service, I think roughly half of them, but a lot of it has to do with what your service is. Avalara has these Avalara-specific tax codes where you say, this best describes the service I offer. We then make that determination if you're using our software, whether or not it's taxable or not across all 45 states plus DC that collect tax. So we can handle that for you, is the easy answer. But every state is different, and I'd say roughly over half the states actually charge tax on services. But again, it depends what service you're offering. So probably not the great answer that you wanted, but hopefully that provides a little light to it.
That was the 30-second version of a much more complicated answer.
We can talk about that for an hour.
All right. Well, we are right at the top of the hour. I know that we have had so many questions, and I really appreciate everyone being engaged. And I'm sorry we weren't able to answer each and every one. Like I said, we could be here for days and days responding to all the questions that come in. So I think, obviously, we have recorded all of your questions. We will do our best to follow up with you after the webinar. We have many other webinars on lots of different topics that many of you were asking about. Some of you were asking about webinars specific to exemption certificates. Some of you asking about webinars specific to services or software. Go to avalara.com/webinars, and that has a complete list of all of our webinars. But Matt, thank you so much for being the sales tax guru here. Appreciate your time, appreciate your expertise. And for everyone else on the call, hopefully we'll see you for one of our webinars soon. Thanks, everyone, and have a great day.